This video is to explain liquidity ratios. The two main liquidity ratios. Keep in mind there are many. Alright, I'm going to be explaining the current ratio and the quick, which is also called acid test, also called liquid ratio. Now, you need to keep in mind that both of them make use of current assets, okay, and current liabilities. So if we think of the entire list of current assets that are out there, current assets, and most current assets can link with a similar current liability. Okay, so we've got current assets and current liabilities. So you think about current assets, people who have to pay you are called your debtors. If you want it in writing from them, it's better to take it in the form of a bill of exchange, which is a negotiable instrument similar to a check, and that becomes a bills receivable. Okay, then what else would come under current assets? Okay, you think about inventory. Okay, inventory itself can be broken up into raw material, work in progress, finished goods, then you have debtors, you have bills receivable, you have inventory. Okay, think of any prepaid expense. Any expense paid in advance is of value to you until you are done using it. Okay, so then you can give an advance to your supplier until he gives you your money back, or normally gives you your supply. It is a current asset. Okay, there can be any number of other current assets. You can think of cash. Okay, you can think of bank balance. These are our usual suspects. Okay, this list is going to be helping you in ratio analysis. It will help you in working capital management to be able to identify the different types of current assets and current liabilities. Now, the way we have debtors for current assets, okay, the way we have debtors for current assets, we can have creditors. Okay, we can have creditors for current liabilities. Similarly, bills receivable for current assets, bills payable for current liabilities. Inventory, whatever it is, we're getting it from these guys. So there's no opposite as such for inventory. But the same way we have got prepaid expense, we can have outstanding expense. The same way we give advance to a supplier and it's an asset for us. In case we get an advance from a customer, then that is going to be a liability. Cash, we can't have negative cash, okay, but we can have a negative bank balance, and we call that overdraft, okay, which is a form of short-term loan. Okay, if you want, you can also think of short-term loan, any loan which is to be paid back within a year, as an example of a current liability. Okay, so I've given you all a list of current assets and current liabilities. If you're given a question, you should be aware of this list and then identify what those items are. Now, as far as the formulae are concerned, for the current ratio, we have current assets upon current liabilities. What are those? You know on top now. Quick ratio, also called acid test ratio, also called liquid ratio, is equal to quick assets. Quick assets. Now, if you're in Mumbai University, a lot of institutions, they stick to something called quick liabilities. Okay, if you think about the more professional programs like chartered accountancy, instead of taking quick liabilities, they stick to current liabilities. So depending on your board, you take a call where you are and decide. Okay, so the formula for quick assets is all the current assets except for those things you cannot easily convert into cash. So you think about inventory. Even if you have a 90% sale, not everything will sell. Similarly, you think about prepaid expenses. Okay, once you make that prepayment, let's say on your SIM card, the mobile company is never going to give you money back. You have to use the balance. Okay, as far as quick liabilities are concerned, okay, some textbooks, some boards, universities, they assume that overdraft is a non-quick liability. That means you don't have to necessarily pay it back as soon as possible, and you can actually use it to handle the others. Okay, so minus overdraft. Right, with that you'll have your formula for current ratio and your formula for quick ratio. Any doubts, mention in the comments. Keep in mind the ideal ratio for current ratio is 2:1. For quick ratio it is 1:1. Thank you. Take care.